Bharat Electronics stock corrected recently after the company reported poor results for Q2. Let's do a three-point analysis of what led to subdued performance in Q2 and what is the outlook on the company going forward. 1. Reasons behind stock price correction. Well, the fall in price is a reflection of the expected moderation in the company's revenue growth. Now, earlier the management had guided for a revenue growth of 12 to 15% for the current fiscal year. However, in the first half, the company has reported a decline of about 11% in revenue. In Q2, the decline in revenue was even steeper at 19% on a year-on-year basis. The company has suffered a setback because of delays in execution and deliveries, which hence missing revenue estimates. There was also the impact of last year's high base when it executed a large project for electronic voting machines ahead of the elections. Now, lower revenue hints at how the company might miss the earlier guidance. To bridge the gap, it will have to post a strong 30% year-on-year growth in the second half of the current fiscal. While the asking rate is steep, one should not be overtly pessimistic considering the lumpy nature of the business. 2. What's the outlook going forward? Well, BEL has the highest market share in domestic defense electronics. While its moat will be to protect its business, growth can create value over the years. The company is benefiting because of the government's strong focus on indigenization of large defense projects. Now, during the first half of the current financial year, the company also recorded a strong order inflow of over 9,000 crore rupees, taking its outstanding orders to a high of over 56,000 crore rupees. Now, its order book is large enough for ensuring a reasonable growth for at least next 3 to 4 years. 3. What should investors do? Well, what's interesting is that the stock has actually come down to an attractive valuation and can now be a contrarian investment. Just because a particular quarter's performance was poor, investors should not discard the opportunity that the stock offers.